Hello viewers, this is Dr. Abraham Joseph from Money Matters. In the next 10 to 12 days, I would like to introduce you to the stock market as to how to trade in the stock market. Many of you are interested in dealing with or trading in the stock market, but because you don't have the full information, perhaps you are hesitant to uh, trade in the stock market. What is the greatest advantage of stock market is, you see, stock markets on an annualized rate grows at a compounded rate of 12 to 15%. Your surplus amount in the bank will just fetch you 7.5%, plus there will be deduction of income tax. But if you invest in stock market for a longer period of time, you will not have to pay a huge amount of income tax. So what is stock market, how it works and all, that is the message that I want to convey to you. So Indian stock market actually started in the year 1875. But the stock markets in the world was established in the 14th century by Britishers, and it spread over a period of more than 600 years across the entire world. In India, we started the stock exchange, as I told you, in 1875. That was with the Bombay Stock Exchange (BSE). We have two exchanges as of now. One is called Bombay Stock Exchange, it's called as BSE, and the second one is called NSE, that is National Stock Exchange. Indian government under the Ministry of Finance has established a regulatory body called Securities Exchange Board of India, that is SEBI, that makes the framework and rules and regulations for the various stock exchanges and the traders and the companies and the investors like us to operate under that particular mechanism. So under SEBI, there are two stock exchanges that are registered. One is, as I told you, is called Mumbai Stock Exchange, and second one is called NSE, National Stock Exchange. Mumbai Stock Exchange, or popularly known as Bombay Stock Exchange, it has got a index. Index is called as Bombay Stock Exchange Sensex, or popularly Sensex. The Sensex as of now is 84,000. Then the Sensex is determined by the best 30 companies that is operating in India based on its performance, and it should have minimum 50,000 crores as a market capitalization. There are companies with more than 2 lakh and 3 lakh also. HDFC has got more than 2 lakh. Reliance company has got more than 1 lakh 20,000 crores. So minimum requirement is 50,000 crores as market capitalization. Then the second one is called National Stock Exchange. It has got 50 companies as its parameter. So it is called, the Sensex is called a Nifty 50. Best 50 Indian companies are taken to consider the weightage of the index. So the Ministry of Finance under the SEBI makes the necessary rules and regulation to how to trade, who to trade, and the mechanism for trading and all is being determined by Securities Exchange Board of India. There are around 8,000 companies that are operating in stock market. Though there are 8,000 companies, all shares are not of that standards. We normally consider Nifty 50 as the 50 best companies. Then we have got Nifty large cap capital and mid cap and small cap companies. So large cap companies means companies with more than 50,000 crores. Then mid cap means companies with more than 20,000 crores, and a small cap is companies with 5,000 crores. So if you concentrate on these types of companies, that's altogether Nifty 500, perhaps we can make a good amount of investment. In order to trade in the stock market, we should have an account called a Demat account. Like we have a bank account to keep our money, our stocks are held in the demat account. We cannot directly trade with the Securities Exchange Board or the exchange. You have to deal through the brokers like Angel One, Zerodha, whatever. So we have to open a demat account. So in order to open a demat account, you require Aadhaar card, you require PAN card, you should have a bank account. Then the access given through the brokers, we can open the demat account, then we can trade. So if you put an effort, within 2 to 3 days you can open the account. Okay, in the next days I will be adding you, I will be sharing with you some more information. Thank you. Bye.